If you're thinking about Amazon for the next few days, let's go to a daily chart and see what we've got going on. We've got an expiration at May 2nd for the end of the week. So if you want to go really quick time and you're watching the chart, that's something super important to consider. Now, super interesting, the volatility range from into the end of May 16 does show the price of 206 that you were talking about. If this price action holds here at the 183 zone, we could look at something that maybe begins at around that 190 to 195 level and goes up into the 206 zone very quickly into the trading space. So let me show you what I think an interesting trade would be. So they report, oh, I forgot.
2 days.
Yeah. Okay. All right, let's do this, and we're going to use the outside ranges for the 16th. That's 173 and 206. So let's see if we can build ourselves a cheap to free butterfly and take it on both edges. Now, my thought is if this chart moves up, it's likely to reverse. And so if it pulls back, it's likely to bounce. And why is that? Because we've got employment numbers ahead. We've got guidance that's a little fuzzy. We've got all kinds of things that are a little bit sideways. So we can do two things, but I think both of them will be high probability trades. So here we are in the trade space. I don't know if you want to be all tricky and do it on the second, but if you do it on the second and you think the price action does nothing, if that's your gut, you think it does nothing, there's actually a butterfly here that requires $1,500 of risk. It only takes us from 185 to 190, but it's a $3.90 credit. Now, this is an unusual trade for me because I normally do butterflies that are no risk, right? But this one, because I believe the price action is going to expand and then contract, if you're a real gambler, then you can take a look at it. It just ticked up to a $4 credit. Now, here's what happens. Let's say the price action goes to 190 and it stalls out. What you end up making is the $3.90 you got as a credit plus the $5 that the chart moves up. So it's literally a free trade unless it goes to 190. Now, if it blows out past 194, then you're a little bit behind the money. Okay, so from that perspective, what it gives you is a shot at upside that reverses because we know the market is in a compressed environment with a lot of unknowns. We've got Jerome Powell next week. We've got all kinds of things going on, and we have the employment numbers on Friday. So let's change. Let's say we go, all right, I don't want to do the second. Let's do the 9th.
And that's next week's, right? So we still wouldn't be doing the monthly contract. We'd be looking at these weeklies.
Yeah, these are all weeklies, right? These are high-powered, quick strike trades because two reasons. One, commodity technical advisors, those are the guys that trade with trend and basically follow trend motion. They are underperforming the SPX right now simply because the market is moving up and down in these very wide ranges and just blowing them out of their trades or putting them on the back foot. So we know that that's the backdrop. The second thing I mentioned already, I talked about all the stuff that we have going on, and there's just a lot of noise, right? Now, if you move it to May 9, you've got yourself a $4.30 credit. So now you have to creep into 195 to get yourself on the back foot, per se. So a lot of room there, but it's a butterfly for credit. If, for happenstance, you're very bullish on Amazon because you think, hey, listen, the chart's going to move up. We have it at the money at 185. So it's already worth $1.60 before the earnings come in. And 195 would be the target. 205 would be the end. That's a $2 debit. So the most you'll lose is $200 right there. The most you'll make is $800 because of the difference between 195 and 185. That's 10. You paid $2 for it, $800 upside, and a very limited and confined risk. So that's my thought there.
Okay.
On the call side, are you interested at looking at any put side formations?
Yeah, I kind of am. I was actually on Amazon. I'm interested in looking at both here.
Okay, so if we go 175 to 165 to 150, it's 96 cents on the downside. If you take them both, it's $3 of risk, so $300. If one of them goes all the way to target, you're going to have a max of $7 as your upside, and that looks like the trade for me.
Okay. That's actually not very expensive at all. That seems
Not
really
at all.
affordable here for Amazon. Okay, cool.